Hello, my name is Josh Weszka from Vision Wealth Partners. Today's video covers various tax strategies to consider throughout the year that can help maximize your overall tax efficiency. Minimizing your potential income taxes requires a regular review of your financial picture and the current tax strategies available to you. In fact, tax planning can be done year-round as an activity. Strategies to consider. Although your picture is unique to you, there are common strategies to consider and discuss with your financial and tax advisors. Here are just a few. Minimize taxable income while saving for retirement. If you're an employee, you make contributions to your 401k plan with pre-tax dollars, thus reducing your current income and possibly your current year taxes. You can also reduce your current year taxes by making tax-deductible contributions to an IRA, if you qualify. If you're self-employed, you can use a 401k plan, a SEP IRA, or a simple plan to shelter your income. You can also see more specific strategies on employer-sponsored plans on my separate video. Maximize deductions. Some deductible items like medical expenses must meet a specific threshold before deductions can be taken. If you are short of the minimum, you may be able to time discretionary expenses so that you exceed the threshold one year but not the next. Consider charitable donations. Depending on your specific tax picture, charitable donations could provide a good source of income deductions. One tax saving strategy is to donate appreciated property. You can take the deduction for the fair market value and avoid capital gain tax on the sale. For additional strategies, see our donor advised fund video on this topic. Review interest expenses. If you pay interest that is not tax deductible, i.e. interest on auto loans or credit cards, consider paying off those debts. Review Social Security benefits. If you collect Social Security, you may benefit from strategies to reduce or defer taxable income. If your non-Social Security income exceeds certain levels, it triggers taxation of a higher percentage of your Social Security benefit. Pay attention to record keeping. Keeping complete records may help you save on taxes, especially if it prevents having to locate or recreate the information. Review your Form 1040 for missed tax opportunities. Reviewing your 1040 could help you spot opportunities for making investments that provide greater after-tax strategies. Pay special attention to the taxable interest, tax-exempt income, and dividend income sections of that form. Municipal bonds. Tax-exempt municipal bonds are an excellent tax-advantaged investment, especially if you're in a high income tax bracket or have moved into a higher tax bracket after promotion or career change. Interest earned on municipal bonds is exempt from federal income taxes, and in most states, from state and local taxes for the residents of those issuing states. Keep in mind, income on certain bonds from particular investors may be subject to the alternative minimum tax. Plan capital gains or losses. Determining when to recognize capital gains or losses depends on whether you want to postpone tax liability by postponing recognition of gains or recognize capital gains or losses during the current year. If the gains will be subject to a higher rate of tax next year, maybe because of a change in tax brackets, or if you cannot use capital losses to offset capital gains, you may recognize capital gains this year. Review IRA opportunities. If you want to maximize the timing and the amount of IRA distributions as long as possible for heirs, understanding IRA rules is critical. If you're retiring or changing jobs, consider rolling over the assets in your company's pension and 401k plan to an IRA. If you have a traditional IRA, evaluate whether it would be beneficial to convert it to a Roth IRA. Estate planning strategies. Review and update your estate plan to minimize potential estate and gift taxes. Life insurance. Life insurance may provide liquidity to pay estate taxes and could be an attractive solution to other liquidity problems, such as family-owned businesses, large real estate holdings, and collectibles. Life insurance proceeds can pass free of income and estate taxes when structured properly. Saving money and taxes paid can put or retain real dollars in your pocket. Those dollars can be applied to debts or be invested to go to work for your overall net worth growth. Pay attention to these strategies to try and maximize where you can. Working with your tax and financial advisor can help to make sure everything is working as efficiently for your particular situation. Thank you for joining me in today's video. For more videos on a variety of wealth management topics, head to our YouTube channel. Thanks for watching. I'm Josh Weszka from Vision Wealth, your dedicated wealth management partner.